You love your family. You love your friends. So when your sister asks you to co-sign a car loan, or your best friend needs help with an apartment lease, or your adult child wants you to guarantee their student loan refinancing, your heart says yes. You want to help. You want to be the good person. But here's the truth that the lenders won't tell you and that your loved one will never say. Co-signing a loan is not an act of love. It is an act of financial suicide. 75% of co-signers end up making at least one payment on the loan they co-signed. 50% end up paying the full balance. And your credit score? It tanks the moment the primary borrower misses a single payment. The relationship? It's often destroyed by the resentment and financial strain. Co-signing is the one helpful act that destroys families and credit scores simultaneously. And if you stay until the end of this video, you'll learn why you should never co-sign and what to do instead when someone you love needs help. If you stay until the end of this video, you'll learn the brutal statistics on co-signing, the legal reality that you are 100% responsible for the loan, and the ways co-signing can ruin your credit, your savings, and your relationships. I'll also give you 5 alternative ways to help a loved one that don't involve putting your financial future at risk. By the time we're done, you'll have the courage to say no to co-signing and the tools to offer real help instead. My name is your name, and today we're going to protect your credit and your relationships. Let me start with a story that will break your heart and make you angry at the same time. A few years ago, a client named Linda came to me in tears. She had co-signed a car loan for her son, who was 22 years old. He had a good job, he promised to make the payments, and she trusted him. 6 months later, he lost his job. He didn't tell her. He stopped making payments. The lender didn't call her until the loan was 60 days delinquent. By then, her credit score had dropped 150 points. She was planning to buy a new house. The mortgage application was denied. She had to pay the remaining $12,000 on the car loan herself, money she had saved for a down payment. Her son apologized, but the damage was done. Their relationship became strained. She resented him. He felt guilty. They stopped speaking for months. Linda told me, "I thought I was helping him build credit. I ended up destroying my own credit and almost destroying our relationship." Linda's story is not rare. A 2025 study by the Consumer Financial Protection Bureau found that over 70% of co-signers end up making at least one payment on the loan. Nearly half end up paying the full balance. The most common loans co-signed are auto loans, student loans, apartment leases, and personal loans. And the most common co-signers are parents. For their adult children, parents want to help their kids build credit, get a lower interest rate, or qualify for an apartment. But in doing so, they put their own financial health at risk. The legal reality: you are 100% on the hook. When you co-sign a loan, you are not a backup. You are a co-borrower. Legally, you are equally responsible for the entire debt. The lender can come after you for the full amount without even trying to collect from the primary borrower first. They can garnish your wages, levy your bank account, and put a lien on your house. And if the primary borrower misses a payment, that late payment goes on your credit report too. Your credit score drops just as fast as theirs, sometimes faster because you have more assets. In fact, the Fair Credit Reporting Act requires that late payments on a co-signed loan be reported on both the primary borrower's and the co-signer's credit reports. The credit score catastrophe: how co-signing wrecks your score. Your credit score is based on 5 factors: payment history, 35 PERN amounts owed, 30 PERN to length of credit history, 15 credit mix, 10 credit mix, and new credit. When you co-sign, that loan appears on your credit report as if it were your own. It increases your total debt, amounts owed, which raises your credit utilization ratio. If the primary borrower misses a payment, that late payment hits your payment history, the most important factor. A single 30-day late payment can drop your credit score by 50 to 100 points. A 90-day late payment can drop it by 100 to 150 points, and that negative information stays on your credit report for 7 years. Even if the primary borrower makes all payments on time, having that extra debt on your report can still hurt you. When you apply for a mortgage, the lender counts that co-signed debt as your obligation. Your debt-to-income ratio includes the full monthly payment of the co-signed loan, even if you never paid a dime. That can push your DTI over the limit, causing your mortgage application to be denied or your interest rate to be higher. The relationship wreckage. When love turns to resentment, the financial damage is bad enough, but the relational damage is often worse. When you co-sign, you are essentially saying, I don't trust you enough to get this loan on your own, but I love you enough to risk my own financial future. That's a paradox. And when things go wrong, when the borrower loses a job, gets sick, or simply stops paying, resentment builds on both sides. The cosigner feels used and betrayed. The borrower feels guilty and ashamed. The relationship that was supposed to be helped is now strained or broken. I've seen it happen with parents and children, siblings, and close friends. The lender doesn't care about your relationship. The bank will call you, not them. One study by creditcards.com found that 38% of people who co-signed for someone regretted it, and 28% said the relationship was damaged as a result. Co-signing a loan for a friend or family member makes a bet on their future behavior that you may lose. The help them build credit myth. Asterisk, one of the most common reasons people co-sign is to help a loved one build credit. The idea is that if they make on-time payments, their credit score will improve. That's true. But here's what they don't tell you. You don't need to co-sign to help someone build credit. There are better ways. A secured credit card, for example, requires a cash deposit that becomes the credit limit. The cardholder uses it responsibly, pays it off every month, and after 6 to 12 months, they can upgrade to an unsecured card. No cosigner needed. Another option is to add the person as an authorized user on your credit card, but only if you trust them completely and you keep the physical card. You can add them, keep the card in your possession, and never give it to them. They get the benefit of your payment history without the risk of them spending, and you are not legally responsible for their spending. The apartment lease trap. Co-signing for rentals. Co-signing for an apartment lease is especially dangerous. Unlike a loan, a lease is a contract that runs for a fixed term. If the primary tenant moves out early, damages the property, or stops paying rent, you are on the hook for the entire remaining term, plus damages, plus legal fees. Landlords know that co-signers are often the only ones with assets, so they will come after you aggressively. And evictions? If the tenant is evicted, that eviction goes on your record too, making it nearly impossible for you to rent in the future. I had a client who co-signed for her niece's apartment. The niece moved in with a boyfriend, who then trashed the place. The niece disappeared. The landlord sued both of them, got a judgment for $15,000, and garnished my client's wages. She had to pay the full amount. Her credit was ruined for years. She told me, I will never co-sign again. Not for anyone. The student loan trap. Parent Plus versus co-signing. For student loans, parents have a choice. Parent Plus loans or co-signing a private student loan. Parent Plus loans are in the parent's name only. The parent is solely responsible. Co-signing a private loan puts you equally on the hook with your child. Neither is good. But at least with a Parent Plus loan, you know you're responsible. And there are income-driven repayment options and forgiveness programs for Parent Plus. Private loans have few protections. My advice: avoid co-signing private student loans. If your child needs a loan, have them exhaust federal student loans first, then consider Parent Plus as a last resort. Better yet, help them apply for scholarships, work part-time, or attend a cheaper school. The 5 alternatives: how to help without co-signing. Now that I've scared you intentionally, let me give you 5 concrete alternatives to co-signing that actually help your loved one without destroying your finances. Alternative 1. Give a gift, not a loan. If you have the means, give money as a gift. No expectation of repayment, no strings attached. If you can't afford to give the full amount, give a smaller amount. A gift of $5,000 is more helpful than a cosign loan that could cost you $20,000. Alternative 2. Offer to match their savings. If they need $10,000 for a car, offer to match whatever they save up to $5,000. They save $5,000, you give $5,000. This incentivizes them to save and reduces your risk. Alternative 3. Help them build credit through a secured credit card or authorized user strategy. A secured card requires a deposit, say $500, that becomes their credit limit. They use it responsibly, pay it off monthly. After a year, they get the deposit back and can get an unsecured card. You don't need to co-sign or add them as an authorized user on your card, but keep the physical card. Their credit improves without any risk to you. Alternative 4. Be a financial coach, not a co-signer. Sit down with them and help them create a budget, improve their credit score, find cheaper alternatives, or negotiate with lenders. Your time and advice are more valuable than your signature. Help them understand why they can't get a loan on their own and what steps they need to take to qualify. Alternative 5. If you absolutely, positively must help with a loan, consider a co-borrower arrangement on a smaller, secured loan. For example, you could open a joint savings account at a credit union and take out a share-secured loan. The money is secured by the savings account, so if the borrower defaults, you lose the savings, not your entire credit. This limits your risk to the amount in the account. The one exception: spouses and domestic partners. The only exception to the never co-sign rule is for spouses or domestic partners. When you're married, your finances are already intertwined. Co-signing for your spouse is essentially the same as taking out a joint loan. You're already on the hook for their debts in many community property states. So co-signing for a spouse doesn't add much additional risk. But for anyone else, parents, children, siblings, friends, significant others, the answer is no. What to do if you've already co-signed? Asterisk. If you've already co-signed a loan, you're not without options. First, monitor the loan carefully. Get online access to the account. Check it monthly. If the primary borrower is late, you need to know immediately. Second, ask the lender if they offer co-signer release after a certain number of on-time payments, often 48 months. If the borrower has a good record, you may be able to get your name removed. Third, consider paying off the loan yourself if you have the cash and the borrower is unreliable. That's painful, but better than wrecking your credit and being sued. Fourth, never co-sign again. The legal protections, or lack thereof. Asterisk, the Credit Card Act of 2009 and other consumer protection laws do not apply to co-signers. You have no special rights. The lender can collect from you at any time. You cannot discharge a co-signed loan in bankruptcy without also discharging the primary borrower's obligation, which may not be possible. In many states, the lender can pursue both parties jointly and severally, meaning they can collect the full amount from whichever party has the money. If you have assets and the primary borrower doesn't, you will be the target. the emotional cost. Saying no without guilt. The hardest part of refusing to co-sign is the guilt. You want to help. You don't want to be the bad guy. But saying no is an act of love, not cruelty. By saying no, you are protecting your financial future and your relationship. You are also forcing the borrower to take responsibility for their own finances. They may be angry at first, but eventually they will respect your boundaries. And if they don't, that tells you a lot about the relationship. Here's a script you can use. I love you, and I want to help you. But I've made a personal rule that I never co-sign loans for anyone. It's not about you. It's about protecting my own financial security and our relationship. I can help you in other ways. I can help you create a budget, find a cheaper car, or save for a down payment, but I will not co-sign. Repeat it as many times as needed. Do not waver. Asterisk. A story of a healthy no. I want to tell you about a woman named Diane. Her daughter wanted to buy a condo. She needed a co-signer because her income was too low. Diane loved her daughter, but she had read about co-signing nightmares. She said no. Her daughter was upset at first. But Diane helped her daughter create a plan, increase her income by getting a second job, save a larger down payment, and improve her credit score. 18 months later, her daughter qualified for a mortgage on her own. She was so proud of herself. She thanked her mother for not co-signing. She said, "If you had signed, I wouldn't have worked as hard. You gave me the gift of independence." That's the real help, not a signature, but the confidence to stand on your own feet. Asterisk your action plan. Do this today. Here's what you need to do. First, if you have already co-signed a loan, review the account immediately. Check the payment status, set up alerts. Ask the lender about co-signer release. Second, if you are being asked to co-sign, use the script above to say no. Offer an alternative form of help. Third, if you are a parent, teach your children about credit and debt before they turn 18. Show them how to use a secured credit card. Explain why co-signing is dangerous for both parties. Fourth, if you are a young adult, don't ask your parents to co-sign. Work on building your own credit. Use a secured card. Save for a larger down payment. Prove that you can handle payments on your own. Fifth, share this video with anyone who has asked you to co-sign or who might ask in the future. Sixth, comment below. I will never co-sign a loan. I'll reply to the first 100 comments. If this video saved you from a co-signing nightmare, hit the like button. It helps others who are being pressured to sign. Subscribe and turn on notifications. In the next video, I'm going to show you how to use a solo 401(n). As a freelancer, contribute $66,000 tax-free in 2026. Co-signing is not love. It's a financial grenade that can destroy your credit and your relationships. Say no, offer real help, and protect your future. I'll see you in the next video.